What's going on, penny boys and gals? It's your boy, What the Duck here, and it's time for another PBU live stream. So for today's stream, we'll be doing our cash giveaways per usual, as well as our trading trivia. We'll also be going over some trading psychology tips and tricks, as well as some ways to find support and resistance levels using candle patterns, as well as just candles in general. But yeah, welcome to the live stream. This is our PBU live stream. For those of you who are free members, this might be your first time. Welcome. We do this every Thursday at 9 p.m. Eastern Time Zone. If you are listening in, make sure to click my name, What the Duck. I'm right up here, and you'll be able to view my stream, or view my screen rather. So we do like I said, we do these live streams every Thursday, 9 p.m. for the PBU live stream. Is going to be trading trivia. We do cash giveaways. Tonight we're going to be doing 4 $25 cash giveaways. And of course we go over the PBU homework and we do a trading tip of the day. Today we'll be going over some trading psychology tips. So let's go ahead and do our cash giveaway to start. So I know that you guys are looking forward to see who wins this cash. Like I said, we do this every single Thursday. We're going to be doing 4 of them today. It's going to be 4 $25 cash giveaways. If you do win, you can go to the cash giveaway channel. If you are a premium member, you just go right here. You click the pinned messages and it'll tell you what to do. If you're not a free member, basically what you do is you just message Laser. And you let him know if you want to get paid with Zelle, Google Pay, or PayPal. So you're going to be messaging Laser, saying how much you won and how you want to get paid. And of course, I'll be messaging him, confirming with who the 4 people are. So let me hop back into the chat so I can see your questions if we have any. All right, so we're going to go ahead and do our first cash giveaway. PBU cash giveaway. We got a bunch of people on the wheel. In order to get in, you can get 100% on your homework to get onto the raffle. We also raffle mini games. And that cash giveaway section also lets you know how to get in. And congratulations to our first winner. That's Gas and Trade. Gas and Trade. Congratulations to Gas and Trade for being our first cash giveaway winner. I'm going to go ahead and write your name down here so that we know that it's you. And that's going to be Gas and Trade. Once again, congratulations. You just won $25 cash. All right, so next up, I know some of you might already know this if you're following our Instagram. If not, you can definitely go onto Instagram and give us a follow. It's Pennyboy Stock Alerts. We're going to be going over our student of the month. Each month we pick a student who has shown improvement and just shown a willingness to learn. Last month was Dizzy Dene, and this month, congratulations to Crezzy, and that's a picture of Crezzy right there. Congratulations, Crezzy, for being our student of the month. You've been asking a bunch of great questions in the PBU charting channel and PBU chat. You've been a very positive member of the community, which we stress here in Penny Boys is positivity. And of course, you're asking great questions as being a great student, as far as being willing to learn and willing to stop the old habits of gambling that we all were doing prior to joining here, and now we're doing the opposite. Now we're trading. So once again, congratulations to Crezzy. And maybe make sure that if you aren't already, to check out our 3-month trading program. You can check them out at our free classes. These are free trading classes. You click right here, you'll see little bread emojis. If you're a free member, you can get into this channel. And we have, a little bit like a little explanation of how PBU works, which is our Penny Boys University, our 25-class trading program. We have our first 2 classes available for free for you, as well as a couple bonus classes, trading while working 9 to 5. How to use stop orders versus limit orders, as well as trailing stop orders. We have our bonus super trend indicator class, the trading during a red market class, which definitely might help for today. If you haven't read this one already, it's definitely a good read, especially after days like this. And then of course, options trading 101. That being said, options are very, very risky. And then our PBU Learning Center is definitely worth checking out. There's a whole, I think it's like 19 pages worth of trading tips and tricks. And if you scroll all the way down to the bottom, there's a little table of contents that kind of shows you how it all works, like what's on each page. Let me go right back into there. A red market class for this whole month. Seriously though, right? All right, so that was our first cash giveaway. We went over who our Penny Boy University member of the month is. Now let's go ahead and get right into the trading tips of the day. The trading tip of the day is we're going to be talking about, I'm going to come back to the Discord, we're going to be talking about trading psychology. So, do you want to be a trader? I'm assuming the answer is yes. That's why you joined Penny Boys University. And if the answer is yes, well then it's important to realize something, and that is that trading is war. It's a bunch of battles. All those candles that you see, all those green and red candles, those are battles between bears and bulls. And that's why we refer to trading as war. And as traders, we have to go to war. And not only that, but we had to compete against the most powerful warriors in the battlefield. And in the stock market, money has always been power. Financial institutions, they tried their best to hold all the keys to the market, making it so you had to call up a broker in order to make a trade, and it cost a whole bunch of money just for one trade. But recently, we've been given a way to fight back. We've been given Robinhood and Webull and other brokers that allow zero commission trading. We've been given access to free scanners and free screeners, even if we don't know the difference between the two. We now have access to breaking news and in the stock market right on our cell phones. We can join Discords like this one with like-minded traders and discuss different trades. And in those Discords, or at least in this Discord, there are bots that can spit out Fibonacci prices, highs and lows, as well as supports and resistance levels. Basically, technical analysis is now available to all of us, to the masses. And like I said before, money has always been power in the stock market, but now knowledge is also power. So however, even with the access to all this power, the masses decide to jump right into the stock market guns blazing. They're slow to respond to inevitable losses and continue to throw money at losing plays. The masses chase stocks, and the masses hold bags. The masses ignore all the tools that are available to them and instead use their emotions to dictate their trades. We here in PBU, however, we are trying our best to not be the masses. That's why we are here. That's why so many of you have joined Penny Boys University. You see, the masses lose money, and you're probably sick of losing money. The majority of new traders lose money in the stock market. The majority of new traders quit within their first 3 months. The majority don't know what they're doing. And you want to be the minority in this case. See, our Penny Boys University alumni, they're the minority. They decide to invest their time into learning so that they can make smart investments with their money in the stock market. The current Penny Boys University class, the class of 2021, quarter one, they're also the minority. See, they all decided to take the first step towards learning how to stop gambling in the stock market and start trading. See, each and every one of you watching this video right now, or this stream, you're also the minority because you're putting the effort into learning how to trade. That's why you're in this Discord. That's why you just chose this Discord as opposed to all those pump and dump ones. You chose one that, that focuses on learning and educating instead of just playing follow the leader on StockTwits or Webull comments. Because the majority of the time, the person that you are listening to on StockTwits or Webull comments, they probably lost more money than they won. And maybe they're just pumping a stock that they are a bag holder of, or maybe they truly do believe that the stock will go up, but they don't have any technical or fundamental reasoning behind it. That's gambling, and why would you want to follow a gambler? You see, the person that you can trust the most is yourself. That's why in Penny Boys University, we teach you how to make your own personal trading plan based off of your own personal emotions, your own trading psychology, your own personal schedule, your personal routine, your mindset, your own risk tolerance, your goals, and even your account size. See, it's not a one-size-fits-all with trading. And in PBU, that's why we stress making a trading plan. The whole thing about PBU is we have all these courses, but it's all geared towards making a trading plan. And if you go to the free class area that I was just talking about, that's definitely one worth checking out as far as a free trial. That's probably the closest thing we have. We have the free alerts, and we have that free class area where there's like 5 bonus classes. I'm going to keep putting more in there. And you have these free live streams that we do every day almost. We have one per day. But yeah, so like I was saying, we provide alerts based off of technical and fundamental analysis, meaning technical analysis being charts and fundamental analysis being the companies, their financials, and all the other stuff that goes along with that. See, there isn't one alert that goes out that the alerter, either Big Quench or Mr. Stocklock Profits, isn't already getting into with their account at the same price that it was alerted. See, we aren't some random faceless people on the internet. We have these live streams every day. Usually I have my face on the stream, but since we're doing it through Discord, I don't. We have these live streams every day of the week so that you can see who we are and why we do what we do. And we have a track record of our alerts as well. And if you don't believe it, then you can check out our free alerts and find out yourself. I don't want you putting money into anything that you don't trust. So, definitely check it out yourself with the free alerts, with the free classes. Some people only take the classes. I know people in PBU who are doing this 3-month trading program, the class program, and they're not even taking alerts. They're paper trading. They're learning because they realize that investing in themselves is the way to go before investing your own money. That's why we have the free trading courses. But even with all that, even with amazing premium alerts at your disposal, it's still so important to learn how to become your own trader. Because these aren't pump and dump alerts. They aren't just follow the leader alerts. They aren't alerts you can just chase and pray that you get lucky. These are real These are real trades, and that's why we want you to become a trader. That way you can follow the trades. See, a pitcher can throw you the easiest pitch to hit, but if you don't know how to swing a bat, the chances are you're not going to hit that baseball out of the park. See, Penny Boys University is about teaching you how to swing that bat, because anyone can learn how to trade, and everyone should be able to learn how to trade. See, at Penny Boys University, we try to make classes so that anyone can take them. If you work a 9-to-5 job, or you work a graveyard shift, you have a family, if you travel, you might see pictures of people on the internet with fancy computers with 4 monitors and LED lights everywhere, but you don't need all that to trade. It definitely helps, especially for day traders having multiple screens, but new traders typically start out with swing trading, and with swing trading, it isn't about how fast you are, how many computers you have, it's about how accurate you are. Penny Boys University can be done on a cell phone. You can use all the techniques that we go over in PBU using your cell phone. You don't need a computer to be in Penny Boys University. You don't need a fancy computer or even a laptop, for that matter, to benefit from these classes. All the trading sites that we go over are free. We have a whole class geared towards free trading sites that you can use to help your trading. Anyone should be able to learn how to trade, and everyone should be given the opportunity to learn how to trade, and that's what we stress here in Penny Boys University is, giving everyone the chance, because like I said, we're all humans here. We all have money in bank accounts and families, or even just bills to pay. So we should all be able to be given the opportunity to learn how to make money in the stock market. So when you're learning, it's important to move slowly, one step at a time. See, the stock market, it's been around for a long time, and it's not going to go anywhere. See, wins and losses are how we learn to trade. That's how new traders figure out what works and what doesn't. So when starting out, it is recommended to use a small account or even a paper account. I'm not going to tell you what to do, but that's what we recommend. And it's a lot easier to make, because it's a lot easier to make up a few $100s than, trying to make up a few $1,000s that you lost by making novice errors, which does happen to almost every trader when they start out, including myself. I'm glad I started out with a small account when I was learning, because I made mistakes because I was beginning and I was learning. That's how learning works, That's when I was learning how to ride a bike. I fell first, a couple times I rode. I said I'm cutting out. Can you hear me now? Test. Okay, so it must be just. But yeah, so like I said, I was, when I learned how to ski, I fell down, my first couple times. And that being said, when I learned how to ski, I didn't learn on black diamonds. I took classes first, and then I learned on, the green hills, and then the blues, and then the blacks, and I progressed as I went. But first I took classes, and that's why people in PBU are, doing this the right way. You're learning before you start trading, or before you go crazy trading. Just like in doctors go to school before they do surgery, and even before they do surgery, they do internships or residencies. Same thing goes with with trading. First, you want to take some classes and learn, and then you want to start off small, and then eventually, you can promote yourself. Think of it like a business. This is your own personal business. You just opened up. As soon as you opened up that bank account or that stock trading account, that portfolio, you opened up a business. And you gotta look at it that way. You got to protect your capital, and you don't want to go balls to the wall. Right off the bat, because that's how businesses fail. I've seen it plenty of times. Working in the hospitality industry, I've seen many restaurants fail. The first 2 years, before opening up, because they didn't know what they're doing when they started. But like I was saying, you can be a trader, or you can be in the emotional crowd. See, traders succeed when they are able to use their plan to stay one step ahead of the emotional crowd. See, they are able to realize when the time is right to tweak a trading plan so that they can take advantage of the herd or even market conditions like here. But before you create that plan, you have to first realize who you are as a trader. And in PBU, we took a trading psychology test to see what type of trader we might be. And there were a bunch of different types of results, and it was really interesting, actually. A lot of people, I thought there'd be 3 results and everyone would get the same thing. But this one was actually pretty cool, because there was a bunch of different results, and almost everyone got different responses or different results from this trading psychology test. So I thought it was pretty cool. And thanks to, I can't pronounce the name, but special thanks to the person who found that trading psychology test for us. So we're going to go over that test. What's my mouse? There it is. All right. So there were a bunch of different responses, and here are a few of them. One of them was detailed trader. So this is a trading psychology test that we took, and I'm going to make a little trading class on this where the test will be there available for you. I'll make a little bonus class, and I'll probably put it in that free trading class area, because I think this is very important for people to be aware of. And like I said, we try, we have the Penny Boys University trading courses, but like I said, we do believe that, or at least I believe that everyone should be given the opportunity to learn how to trade, and that's why we do these free alerts and these free trading courses for you guys. So we have detailed traders. 3 qualities of this type of trader is being able to see the big picture, meaning seeing different possibilities or connections in the market, being able to make decisions based on logic and technical or fundamental analysis as opposed to emotions, and being decisive, not second guessing your decisions. I'm just going to check to make sure that when I went over it, everyone could see that when I went over there. I know sometimes it cuts off when I switch screens. Looks like we are good though. All right, cool. Actually, I'm going to go my Discord on the... Everyone can see the screen with the detailed traders? Perfect. All right, so I'm going to just do that again. So, like I said, detailed traders, 3 qualities of this type of trader is being able to see the big picture, being able to make decisions based off of logic or technical and fundamental analysis, as opposed to emotions, and being decisive, meaning not second guessing your decisions. So one example of this type of trader is probably one that we all know, and that's Warren Buffett. He once said, actually, if you want to be a successful investor, then you have to know every detail of every listed stock. And when someone rightfully asked him, he's like, well, you do realize there's over 7,000 listed stocks. Well, his response was, well, start with the A's. See, if you're the type of person who is quiet and serious all the time, if you tend to be thorough and organized in everything that you do, if you only act on decisions that you are 100% sure of, I mean, you don't like to take too many chances, and if you like working alone and tend to analyze every detail before sharing your thoughts with others, well, then maybe you are a detailed trader. So what does all this mean? Well, if you are a detailed trader, then maybe you might benefit from swing trading. You see the big picture, which might help you with finding strong long-term support and resistance levels in swing trading. If you're a detailed trader, then implementing a trading plan and sticking to it could come easy to you, which is super helpful with swing trading. You might also be well equipped for charting and technical analysis. That being said, you might struggle with being willing to change your plan when the market changes, like it did today, or the plan starts to not work out. You might tend to have trouble seeing or agreeing with anything that is different from your initial thoughts, meaning being stubborn, which is an emotion that we go over in our trading psychology courses. You might also let stress make you double down on plays or hold bags due to overconfidence, which is another type of emotion. It is important to be mindful of risk management and be mindful that it is okay to take a loss on a play, especially if you are this type of trader, because it's hard for detailed traders to do this because they don't understand that protecting your capital is how you become profitable in the long run. So that is a detailed trader like Warren Buffett. Another type of trader that we have is let's make sure everyone can see me still. Yeah, we're good. Another type of trader we have is a strategic trader. So if you are this type of trader, which is a strategic trader, maybe you might be the kind of person that values intelligence, knowledge, and competence. You might be a strategic trader. That might be me. Maybe you're at work and you hate people who just can't figure out the job. Like they just can't get it right. No matter what they do. And people who might frustrate you, who just can't get the job right after 3, 4, 5, 6 days of training. You're like, this is so easy. Like, what are you doing? Maybe you're a strategic trader. You see something they don't, and you're good at certain things that other people might not be. Strategic traders are built for the stock market. They can see the big picture. They can see the connection between certain aspects of the market, and they can make decisions based off of logic as opposed to emotions, kind of like the detailed trader. Paul Tudor Jones is an example of a strategic trader. See, he's one of the world's best hedge fund managers. He has never had a red year. His worst year was when he was only up 11% back in 2000. He actually once said, "I'm always thinking about losing money as opposed to making money. Don't focus on making money. Focus on protecting what you have." And he's so right. See, it's not about what you win, but it's about how you lose. If you're a strategic trader, you might be built for both day trading and swing trading. Charting might come somewhat easy to you, as well as setting risk-reward based goals for every trade. Developing a trading plan might be your strong suit. The trick is sticking to it. See, as a strategic trader, just like a detailed trader, you might let your overconfidence in yourself get in the way of logic or reason. You might be so focused on being right that you break your plan and start trading with your emotions, which is overconfidence or even greed. So it's important to protect your funds from your ego if you are a strategic trader. You don't always have to be right in order to be profitable. So that's definitely one thing to keep in mind if you might be a strategic trader. is, your ego and just overconfidence, and just realizing that it is okay to be wrong, and sometimes you are wrong, and you probably shouldn't hold a trade just because you don't want to be wrong. You hold a trade because it fits your trading plan, or because you see a technical or a fundamental reason to. That's why we hold on to trades, not because of our emotions. So make sure test we're all still here. Perfect. All right. The next one is fun-loving trader type. So, are you optimistic and outgoing? Do you like to have fun? Can you make light of a serious situation? Are you always the life of the party or the first one to crack a joke? If this sounds like you, then you might be a fun-loving trader. I personally know a few people who I think are fun-loving traders in our Discord. Like, actually, one of them is a guide. I'm not going to call anyone out, but he might know who he is. Howard Schultz is another example of a fun-loving trader type. So he was a director of marketing for Starbucks back when they were just a coffee bean store. They just sold coffee beans. They didn't they didn't have a bar like they do now. So he told the owners that what they should do is set up a coffee bar. The owners laughed at him. They thought it was a terrible idea. So Howard said, "Well, duck you then," and he went and created his own coffee bar business. And I said duck, by the way, I'm not swearing on stream. The next year, he used his profits to buy out Starbucks for $3.8 million. He then turned Starbucks into what it is today, using that idea that the other owners laughed at him for. See, he's a fun-loving trader, but also a fun-loving guy because he gives his employees stock options and free medical care, even if they only work 20 hours per week. His motto is, "I want a company with soul." I know we might have some Starbucks baristas who might not be, feeling the same way about that, because I know that they're, like it says here, with their low salaries, but I guess people, even the employees still like him despite that. So if you're a fun-loving trader, you might be built for day trading, depending on how they implement their time, or how you implement your time. You see, you might not be the best at charting, but your grasp of trading psychology can still make you an amazing trader. You see, your optimism can help you deal with emotions that others let take control of their trading and their portfolios, dragging it to the ground. Being able to manage your emotions is especially important in the fast-paced world of day trading. As a fun-loving trader, your quick mind will help you see opportunities that others don't, and your optimism can help you act on them. See, fun-loving traders work best when they are working with others, so maybe having a mentor or a group like Penny Boys might be beneficial for you if you are this type of trader. Some things you might have to work on as a fun-loving trader is the need for excitement. See, if the market is red or the market is trading sideways, meaning not much is going on, you might find yourself in chat rooms looking for trades to take out, trades to take based off of your boredom. See, this is a dangerous way of trading while bored. See, we don't trade because we are bored. We trade when we find plays that fit our plan. Otherwise, we're just gambling again. You might also be willing to listen to chat rooms if you're a fun-loving trader, or message boards as a fun-loving trader due to your optimism. So you should be mindful of that, because you might be optimistic in what other people are saying. See, it's okay to see what others are saying to help determine market sentiment, meaning what people think's happening of the market, or just what people are talking about in the market. But the person that cares the most about your money is you. So that is who should be making the final decisions for you, not anybody else, especially not chat rooms. Especially not Weeble comments or Facebook, random Facebook groups. Even with these, the alerts that we give out in Premium Discord, you should only take the plays that you are comfortable with and that fit your trading plan. See, we give out tons of alerts per day, and it's okay to not take one if it doesn't fit your plan. I skip plenty of alerts. There's too many alerts for me to take all of them. You also have to be careful about being over-optimistic in your plays as a fun-living trader. So you might throw your money into a losing play, turning yourself into a bag holder because you're overly optimistic that it's going to come back. So in the case of a detailed trader or a strategic trader, they do this because they're overconfident. Here, a fun-loving trader does it because they're over-optimistic, which are two different emotions that have the same outcome. So if you find yourself doing that, that's why we do these tests, and that's why we do these trading psychology courses, so you can know, oh, this is why I might be doing this, and now you can work on it. So like I said, there are many ways to let your emotions get the best of you in the stock market, and that's why it's important to learn what type of trader you are, so that you can best develop ways to manage those emotions. So that's why it's so important to do these trading psychology courses that we do. We have a whole month of it in PBU. Like a Steeler player says, I don't have a plan, and that's okay not having a plan for now. Now, that's why you joined Penny Boys University, because you didn't have a plan. Or that's why I joined. I didn't have a plan. My plan was I saw someone say the stock's going up, so I'm like, okay, well, I guess so. I don't know what I'm doing. But in PBU, we learn how to become our own trader, and we learn how to eventually read charts, and more importantly, read our own emotions and not trade just based off of follow the leader, or trade based off of emotions. Maybe FOMO, which would cause following the leader, or maybe maybe just stress or whatever it may be. There's so many different emotions that we go over in trading psychology courses in PBU that definitely is worth checking out. And yeah, no, PBU is our 25 class program that I did. Yeah, I made all the videos and I made all the handouts for it. So PBU is 100% original. There's nothing that's taken. This is just a bonus class. But yeah, so that's fun-loving trader. Next one is an administrative trader type. And even all this stuff I'm talking about right now is stuff that I researched outside of just this trading psychology test, so that we can learn more about it. Just as opposed to just reading this. Anyone can read this, but I did a couple of videos and stuff, or watched a couple of videos that kind of went over some of these types of traders and stuff, so we can go over it together and kind of learn, what they all are and which ones we might be. And not text mark. What does that have to do with anything? Well, because I can watch the videos. Anyway, so administrative trader type. This one is actually a really interesting one. So maybe when you're put in group projects, maybe you always ended up being the one to lead the group. Or maybe you're really practical or realistic or good at making decisions and then sticking to them. If that's the case, then you might be an administrative trader. See, Tom Basso is an example of this, the guy on the right there. He was the type of person who found things that humans had to do repetitively, and he developed systems that could do it automatically for them. Kind of like how the drop percentage calculator works, or the spreadsheets that we give out in Penny Boys University to track your trades with. See, there are formulas in those Excel sheets that we give you that make it so that we don't have to, or that you don't have to do all the busy work of figuring out the math for targets and stop losses, or maybe your drop percentage buy-ins, or all that stuff is done for you in those Excel sheets that actually Pookie's Revenge helped make that. I personally I'm not an administrative trader type. This is not me at all. I'm not this kind of person. But if you are, maybe you like charts and that kind of stuff, or like Excel sheets and that kind of stuff and calculations, then maybe you are an administrative trader. And if you are an administrative trader, then you might be geared towards swing trading, or even day trading, or maybe even options trading. You see, you might be able to understand and break down different trading strategies and plans, which could help with finding reversals and trends for swing trading and patterns for day trading. You might also be good with data analysis, which could help with understanding the Greeks or implied volatility and everything else that goes behind options trading. Because you are so good at breaking down strategies, it is important that you are aware of who you are listening to if you are this type of trader. Because you don't want to spend all your time breaking down a strategy if it's wrong, or if it doesn't work, or if it's just just not fit for your plan. So because time is money, and that's why we're so open here at Penny Boys. We have the updates from the guides channel, where myself and the other Penny Boys guides can give everyone updates on their accounts and the alerts they're taking, including the losses. Actually, I stress to them all, I'm like, please include your losses, and let us know how you can, what you learned from that loss, because that's the only way that we can develop as traders. And I don't want y'all thinking that all these guys and myself, don't take losses. Of course we take losses. You should see my account right now after this red day. I have a bunch of plays that are in the red. But, it happens, and, how we manage those losses, and, if we sticking to our plan, when those losses happen, or those, days happen, I stuck to my plan, and I'm still way, 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 way up on the week and in the month and the year, because I stuck to a plan. So another type of trader is an independent trader type. So maybe you find yourself questioning people all the time. Do you come up with a lot of original ideas? Do you like proving people wrong with facts? Well, if that's the case, well, then you might be an independent trader. Albert Einstein, and actually looks like Neo6280 says that's me. So yeah, maybe you are an independent trader, just like Albert Einstein and Socrates are examples of independent trading type of mentality. See, they questioned others, and they generated new ideas constantly. Another example is Data. I actually haven't watched it, from Star Trek. More of a Star Wars guy myself, but he said he's programmed to evolve and to better himself. if you're an administrative trader, then following alerts actually might be your strong suit. So you might find it easy to see trading ideas that you like and are able to figure out if a certain type of trading works for you and your personality, or if it doesn't, which is good for following alerts because you're able to filter out the alerts that you don't want to take pretty easily, and are also able to break down the different alerters, meaning Mr. Stop Loss Profits, James Legends, and Big Quench. You can kind of break down their trading styles and determine which process, which one, I guess which process or which alerters process that you like the best, and that you might be best at following. So this might also help when it comes to developing your trading plan, as you might have a good grasp of what works and what doesn't. See, trading might be interesting for you, and in turn fun, which is really important, because having fun, this isn't, unless this is your full-time job, you don't want it to be a job. You want, even with jobs, you still want to have fun at work. So, if you find this, taking away from your lifestyle, from your happiness, then that maybe it's time to take a little bit of a break. But if you are or just maybe change your game plan. If you are an administrative trader, you need to be aware of your emotions, or the fact that you do have them, because every human does have them. So you might not use them a lot when you're trading if you're an administrative trader, but this might also make so that you're not aware during the few times that you are using your emotions. You might also get frustrated when you can't figure out a trading style or indicator, or figure out a different type of plan, and you just come to the conclusion that the indicator is no good, or the trading plan or the trading style is no good, just because you can't understand it, even though they might be great. If you spend a little bit more time trying to figure it out, you might just get frustrated easily if you don't understand something. It's also important as this type of trader to get out of the house. Don't let trading consume your life. And the same goes for everyone, not just these type of traders, but it's important to have balance in your life, just like with anything. Next up is planning traders. See, planning traders tend to be decisive and to the point. If you like being in charge, or you're comfortable leading a group, you might be a planning trader. Does anyone in the chat feel like this might be them? They like being in charge. They like, they like leading groups. They like being the one who's telling people, telling people what to do. Maybe you're a boss at work. Maybe you enjoy that. So if any of y'all, in chat that might relate to you, then this might be the type of trader that you are. Ed Seikoda is an example of this. He is one of the first ever computerized trend followers. He could be known as the Bill Gates of trading. You could be geared towards investing long-term end swings if you are a planned trader. But if you let your emotions get the best of you, this might not be the case. Day trading or short swing trading might be the way to go if you find your emotions getting the best of you. So you might be good at creating a plan and sticking to it, which is really important for long-term investing and swing trading. You might be good at finding good entry prices, which is the key for swing trading. But not only that, you might also be good at being able to tell which trades have low risk and a reward that is obtainable, which is super, super important for swing trading. Risk versus reward. Developing and using a trading plan might come easy to you, which is really important. But because you plan everything, sometimes you might not be aware when your emotions are starting to take control. See, the lines might get blurred between emotional trading and trading based off of your plan. That's why it's important to identify which emotions you tend to have based off of your biological variables, personality traits, and cognitive traits, which we went over all that in Penny Boys University during our trading psychology classes. You might also find yourself becoming bored or trading off of a plan. You might find yourself being bored because you're trading off of a plan. And the repetition might make you want to take risks and start trading with your emotions because you're bored. Because you have a plan, it's working, but it's like, all right, well, this isn't exciting. Like, I'm just doing the same thing over and over, and I'm making money, but I kind of want to have some fun with this. So the repetition is what might make you start taking risks and start trading with your emotions. You might also be too trigger happy with longer plays while trading due to being able to see patterns and make quick decisions. You might get impatient when they're not happening. So you might get a little trigger happy when it comes to that buy and sell button, because you're used to being able to see things quickly. So it's important to know which emotions that we have, or that we all have, so that we can decide which type of trading is best for us personally. So this type of trader, depending on how how your emotions personally affect you, and which emotions you personally have, you might be geared towards one type of trading or the other if you are a planning trader. Next up is innovative traders. So I will see if we have anyone in the chat who is an innovative trader. They might be good at understanding what is going on in the world and taking in new information. So maybe you're really good at reading and understanding the news. Does anyone here like to read the news before they get before they start trading? See what's going on in the stock market, see what's going on in the world, and kind of like really good at like understanding all that kind of stuff. I personally am not this type of trader at all. I am not good at with the news and all that kind of stuff. I'm not not good at breaking it all down. Being able to know what's good news and what's bad news. As as far as what's trustworthy news and what's not. I'm personally not a news guy, but that's okay. I'm because I'm taking these courses. I'm doing these courses and doing this along with you, I guess. And, when I make these courses, I'm also doing them myself. I was able to realize this might not be the type of trading that I might be best at. News related trading, or like Breadmaker says, the news confuses me. It confuses me too. That's why I don't trade based off of the news. I don't trade based off of this is happening and that's happening. No, I personally I trade based off of technical analysis, because I like Neo62A0, I do read comics. But yeah, so innovative traders are usually quick thinking, outspoken, and excitable. And Donald Trump is an example of this. He once said, "Money was never a big motivation for me except as a way to keep score. The real excitement is playing the game." So this could, that might be you. Maybe for you, like, it isn't even about the money. It's just you like the risk. You like how exciting stock trading is. You like putting money in and watching it go up or down, see what's going to happen. That could be you, and that could be good for day traders. This type of trader type, if you're able to handle your emotions and keep them in check. So you're able to understand market news and articles, which can be dangerous if you're listening to the wrong people or reading the wrong articles, because you never know that what can be out there. The news isn't always one-sided, or is sometimes one-sided. It's not usually based off of what's actually going on. It's based off of what the person writing it wants you to hear. And that's why we go over a bunch of great free trading sites that you can use in Penny Boys University that have different types of news, and you can kind of base which type of trading site you want to use based off of what kind of trader you are, in this trading psychology quiz. Maybe you're better at actual market news, just straight up facts, or maybe you like pay people's opinions a little bit more and just seeing what market sentiment is. Depending on what kind of trader you are, that's which tools you use are going to affect that. So you might get excited easily as an innovative trader, especially when you learn something new. You might jump in too fast while trying to use a new toy that you just got, meaning the new indicator that you just learned, or the new candle pattern, whatever it may be. You just want to use it. It's this new thing and it's shiny and you want to use it, and you put money in and you don't know exactly what you're doing yet, but it happens. That being said, if you're able to manage this, then you'll be able to learn a lot of new trading techniques due to your excitement for learning. You might be very confident and outspoken. This is good in day trading when you are right, but as some people, some people know you're not always right, and some people don't have the spine for day trading, whereas people who are innovative traders usually do. I personally am not a big day trader. I don't have it in me. I only day trade certain plays that I'm pretty confident in. However, if you're an innovative trader, you might be more confident in day trading. Maybe we should enjoy it more. But managing risk and having a strict plan is important if you are this type of trader. So you might enjoy the challenges of the market because big ideas attract you, and the stock market is a huge idea, which is great, because enjoying trading is really important. But you got to be careful, if this is you, because you don't want to enjoy it too much and throw too much money in there until you really know what you're doing. Speaking of which, managing your stress is very important, especially for innovative traders. This is because they tend to make emotional decisions when they feel stress. They can be very hard on themselves when they are wrong, or if they bend their own rules, and then by being hard on themselves, they overreact, and they trade with even more emotions. So if trading is doing more harm than good in your life, it's okay to take a break. The stock market is not going anywhere. And take some time to learn, to do these classes, because your mental health is very important, especially for innovative traders, with all the excitement going on. So I don't know if anyone in here is an innovative trader and likes to do those AMC and GME trades like Breadmaker's talking about. If you find yourself standing on the sidelines, speaking of AMC and GME, if you find yourself standing on the sidelines observing until a problem appears, in which case if it does appear you're able to act quickly and confidently, well, then you might be an adventurous trader. So maybe you're there and you're observing, but you're quietly observing. And if something does happen, you're ready, but you're not gonna say anything unless it needs to be said. If that's the kind of person that you are, the kind of person, usually people who are that kind of way, when they talk, people listen because, you're not just blabbing and blabbing and blabbing. You're, if you say something, you mean it. It's important. That's something that, people say about you, then you might be an adventurous trader. If you joined in on the AMC and the GME plays at the top without doing any due diligence, you might be an adventurous trader. And that's okay. You're now aware of that, and you're now able to identify why this happened and learn to manage your emotions and create a plan so this doesn't happen again. See, Jimmy Rogers is an example of of an adventurous trader. He wanted adventure in his trading, but that could lead to losing money. So he understood that, and instead he made adventure in his life, outside of trading. He did a motorcycle trip around the world in some really dangerous and shady areas in pursuit of investment information. Stu Unger, if I'm pronouncing that right, however, is another example of adventurous trader, but on the other side, Stu is one of the only people to win the World Series of Poker 3 times. He's made over $30 million. But because he's an adventurous trader type, it took him only 2 months to lose all of that, and he ended up being broke, dying broke. See, adventurous traders, Jimmy Rogers was able to identify who he was and what he was, and he did something positive with that. He identified and he managed it. He went on an adventure, and instead of adventuring with his money, in the stock market, he adventured, on a motorcycle, which is a lot less dangerous than, it still is dangerous, but a lot less dangerous than adventuring in the stock market, like GME and AMC at $24 or $500 or whatever. Whereas Stu was the opposite. He didn't realize that, and he lost a lot of money. He lost $30 million. So day trading and options trading might be risky if you are an adventurous trader. However, you might enjoy it. So this really depends on if you can handle your emotions or not. So adventurous traders typically love action, and in trading, they love to hit that buy and sell button. That is great when you have the plan and strategy to be successful, but if you don't, then you can end up losing a lot of money very quickly. So make sure to take our Penny Boys University 25 class trading program, or just some type of learning system if you are an adventurous trader, especially if you're an adventurous trader. And then lastly, not least, we have sociably, and anyone here an adventurous trader? I know a lot of people probably are adventurous traders, and then some are not, like Exotic the Poor is. I hate spending money. Let's see, Rob says, then donate to a bank account. Or to PB charities. There you go. Yeah, we have our charity of the month like we do every month. So lastly, we have sociably responsible traders. And this is actually the one that I personally got. So when I did the test, I got socially responsible trader type. And I think I agreed with it. So it says that this type of trader might thrive at finding opportunities in the market. So for those of you who follow my Uber option trades and updates from the guides, that's exactly how I trade those options, based off of market opportunity. And knowing this about myself, I can now be more confident in these types of trades and aware that this might be my strong suit, and maybe try to find other types of types of stocks or types of trades that follow this plan. So far, I'm up big trading this way with those Uber options. So maybe this is one of the reasons. Maybe this is a reason why I should look more into that. Now that I know why behind the what, which is what trading psychology is all about. It says that socially responsible traders tend to deal with the market according to our personal values. So is anyone else like that? I know I'm big like that. You trade based off of your personal values. Like maybe you smoke a lot of weed, so maybe you want to buy a lot of weed stocks. Or maybe someone who has a certain disease or sickness or whatever. So you're gonna invest in a stock that's trying to find the cure for that, or that's working on a vaccine, or whatever it may be. Maybe you trade based off of your values, like Money Mart just said, values driven trader. So I don't know if anyone else is like that. So for those of you who followed my ANC trade, you know that I didn't make that trade based off of fundamental or technical analysis. I didn't trade AMC based off of due diligence. I did it because of my emotions. And it's fine, I'm admitting it. I did it, yeah, and it's in my trading notes, and I'm learning from it. Just like I learn from every mistake that I make in the market. I like making mistakes in the market because I learn from them, and I don't make them again. So the reason why I traded AMC was not because of the charts, was not because of the fundamentals. I did it because of my emotions. I heard that it was the little guy versus Wall Street, and I wanted to be on team little guy because socially or even politically, that's just how I am. I like to fight for the little guy. I got lucky and I made money off that play, but a lot of people didn't. I probably should. I got really lucky. I very well could have lost a lot of money. And this is why identifying your emotions and realizing why you have them is so important. That way we can work on them in the future. I'm going to be able to work on this in the future. See, an adventurous trader might have traded AMC because they wanted a YOLO trade, an adventure, which is a different reason than I did, because I'm able to be aware of the reasoning behind my trade. I'm now able to ensure that I don't make that same mistake in the future. So from now on, I'm not going to be making my social or political points or let my social or political values dictate how I trade. I'm not going to be making those points in the stock market from now. Maybe instead I'll donate to a charity that that's fighting for the little guy, or I'll follow a politician that's fighting for the little guy. Maybe instead of throwing money at AMC, maybe that's the way I'm gonna be, as far as my social responsibilities and all that kind of stuff goes. So it's important to realize that this is why I made that trade. Like I said, I made it because of that. I made it based on my emotions because I was doing what socially responsible traders do. Some people did it because they did what adventurous traders do. Some people did because they did what innovative traders do, or so on and so forth. It's good to know why you did what you did, because a lot of us did it. But if we don't know why we personally did it, then we personally aren't going to be able to fix that, in the future and learn from it. One of y'all might have done it for a different reason than I did it. And if if you're only learning from from my mistakes, then you're not going to learn from your mistakes. You're going to still make those mistakes. So. Like T Frost said, it happens though. I used to call him Shushi. It's Shashi. Yes, Shashi's one of our great Pennyboy guides who's here to help all of us, or all the Pennyboy University members. So it also says that it could be important to socially responsible traders that their trades fit their value system. And that's very true for me. For a while, I didn't trade puts because I didn't like the thought of betting against the market. Then I realized that this mindset was stopping me from making money, and so I changed it, and now I do trade puts, and I made a lot of money trading puts because I realized that the stock market doesn't care about how I feel or my agenda. It's a place to make money. It also says that socially responsible traders might lose focus easily or get distracted. See, I find this happens with me a lot in my trading. I might go and buy a day trade or an Uber option trade that I plan on day trading, and totally just forget about my swing account. I just leave it there, and something might happen, and I missed a stop loss, or I missed a good buy. So I realized this, and I learned from this, and now I only trade day trades or options when I know that my swing account can sit for a little bit, and there'll be like 2 hours, 3 hours a day. I know that all my stops and my alerts and my my little notifications and my limit buys are all in place. Only then do I start day trading, because I know, being the person I am and the emotions that I have, through doing these these trading psychology courses and tests and all that, and learning about myself, I now know this is how I am, and this is this is one way I can work on that, so I don't let it negatively affect my portfolio. That's all this is. All this is trying to make it so you don't lose money. Really quickly, let's do another raffle before we go on. Just making sure that everyone can see my screen. You can see the raffle. I mean the punch board. You know what I'm trying to say. The wheel. There we go. It's not a punch board, it's a wheel. Everyone can see it? Steeler Player asks, how do you get into the raffle? I do throw out a little sign-up sheet every, before the raffles happen, in this chat, in the free live stream chat, and the Stock Talk free chat, as well as on Facebook. And then premium members can go to the cash giveaway area to get extra tickets. There's a bunch of ways to do that. We have raffle mini games for premium members as well to get extra tickets. And if you do your PBU homework and get 100%, you also get tickets. And C-Rod, you do. Yeah, I saw your name. You have a bunch of tickets on there. All names aren't on there because there's just so many names. Like a lot of names. So we're going to shuffle them up, and we're going to spin the raffle. This is number 2. This is our second raffle of 4. So we still have 2 more left for $25 cash, and it's actually going to be one of our Pennyboy University members, Anthony Z. Congratulations, Anthony Z. You've just won $25 cash. Make sure to message myself, What the Duck, or Laser, Just go to cash giveaway area, go to the pin messages, and see which types of which type of cash services we use. We have Zelle, Google Pay, etc. That being said, if you want to, you can also instead of the $25 cash, you can instead get $35 credit towards your account, meaning towards your account for your Penny Boys account, meaning it could go towards your membership, or I believe in the future once we have merch, it will be able to go towards merch. So you can either do $25 cash, which Cash App, Zelle, whatever it may be, that's cash. You can spend that anywhere, or $35 credit to your Penny Boys account. So that's up to you. I know a lot of us last raffle we had 4 winners, and all 4 of them put it towards their account. 3 of them were new members actually, so it helped them get a new membership and become a PBU member. So once again, congratulations, Anthony Z. So really quick, can everybody see my screen? You should be able to see Weeble. Perfect. This is great. The stream is working. We're not freezing. We're not lagging. This is great. So candles and indicators are just one part of trading. You can know all about RSI, MACD, and KDJ, which we do go over in Penny Boys University. You can know all about doji candles and hammer candles, which we also go over. You can know about the bullish engulfing patterns or the 3 white soldiers, which we go over. But if you don't have a good handle on your emotions, chances are you can know all of that and you're still going to most likely lose money in the stock market. Have you ever watched the movie Hardball? It's kind of an older movie. Well, in the movie, there's a pitcher who was dirty. He struck everybody out. Real good pitcher. He had all the talent in the world, but he would always have his headphones on. Back in the day, his little Walkman. I remember those. And he would listen to the Notorious B.I.G. on repeat while pitching. He did this to calm his nerves. One game, the other coach made the kid take off the headphones, and the pitcher, the kid couldn't pitch for the life of him. He let the crowd and the other team's banter get the best of him. He got nervous, anxious, and scared, and he let his emotions get the best of him, and he just couldn't pitch because of that. The same goes for trading. We have emotions, and if they get the best of us, we can make bad decisions in the stock market, even if we have all the talent in the world when it comes to indicators and charts. It's important to be able to find ways to manage those emotions, and for him, it was listening to Biggie. What's it going to be for you? And that's what we try to help y'all with in Penny Boys University. So that being said, candles and indicators are a very important part of trading, which is why we are going over them this month in Penny Boys University. This week we went over candles and candle patterns. Next week we'll be going over moving averages and setting trend lines, as well as how to use indicators to find support and resistance levels. And the week after, we're going over VWAP, MACD, KDJ, and volume, as well as Bollinger Bands, RSI, and a whole bunch of other indicators you can use to find overbought and oversold conditions. And then we start studying for the tests. And then you can become a PBU alumni and then get access to our PBU bonus classes that are only made available to the alumni. Those are the classes are kind of geared towards traders who have already been through PBU and know all the basics, are ready for something a little extra. We also do have the other bonus classes that are for free people as well, but we have a bunch of different indicator classes that are made available only to PBU alumni. So make sure you pass all your quizzes and your tests so you can become a PBU alumni and get your learning on as far as all that goes. So like I said, this week we are going over candles, and next week we're going over support and resistance. So tonight we're going to combine the two. Is it possible to use candles to determine support and resistance levels? Well, the answer is actually yes. So let's go ahead and figure out how we do that. I'm going to pull up the Discord on my other screen so I can see y'all. The test trust me, the test isn't crazy hard. The quizzes are all in our PBU trading class area, which is available to premium members for free. So if you are a premium member, you get free access to Penny Boys University. You get free access if you are a premium member to not only the alerts that are the premium alerts, but you also get access to 25 trading classes for free. It comes with your membership. And you also get access to some of the bonus ones, once you pass your PBU alumni, once you pass PBU. So let's go ahead and see how we can find some support and resistance levels using candles. So this is kind of something different. Not a lot of people usually do. I only use this every once in a while. So this is going to be the 1 week. So you basically, what you do is you go to the 1 week chart. And what we're going to do is we're going to use these candles to make certain trend lines. There are other ways of doing this. There are actually better ways of doing this, but this is, it's definitely good to know. Other easy options that are out there to find support and resistance levels. We will be going over like Fibonacci and all that in the bonus classes, and we'll be going over other support and resistance indicators that are a little bit, that you can use along with this. But this is definitely a useful strategy to have. So all that you do is you go to your drawings. So you can do a trend line. You got a horizontal line. Make sure you're on the weekly chart. And for those of you in Penny Boys University, and we went over the candles. If you already did the candles class, you know that the daily, the 1 minute, the 1 hour, all these candles, these red and green candles, represent one trading period. That trading period being dependent on what chart you're looking at. The 1 week chart, each of these candles is 1 week of trading. So this is one whole week of trading. This is one whole week of trading. On the daily, this is 1 day of trading. 1 day of trading. On the 1 minute, each candle represents what happened in 1 minute. And like I said before, it's a battlefield. During this 1 minute, the bears won the battle. They brought the battle all the way down here, and then the next minute, the bulls won the battle, and then the bears won the battle, and it's a big war, to see who can eventually break support lines or break resistance lines and end up winning or making money, making bread. But yeah, so what you do is you go to the weekly chart. So let's go to the weekly chart. You go to your trend lines and you get a horizontal line, and this is using candles. So all we're doing is we're using candles. There's not one indicator up here. So if you don't know how indicators work, you can still use this method. But like I said, every trader is different. Some people like to use this, some people don't. But it's just something good to know. So what you're doing basically is just using these candles. You're just looking for, on the weekly, you're just looking for support and resistance levels based off of past trading. So levels that were used as resistance on multiple candles. So in this case, we'll start with the support. We'll start down here, so you can see how here it looks like this candle, this candle, this candle, even this candle right here was using this as a support. So we're going to go ahead and draw a line. You can zoom in and be really particular about it. We're just using this we're not actually trading this one, so I'm just going to go ahead and do it a little bit quicker. So let's just do it right there. So there's your first line. And then you go up and click it again. Now you have another line to do. So you just keep looking for another one. So now, we'll look here. We have this candle, and this candle. Let's see if it kind of continued over here. There it did over here. So you have this candle right here, matching up with these 3 candles. So if you want, you can make another line right here. Because you have the wicks here kind of match up with this candle's open. And you just go ahead and do another one. Let's just say, let's see. I mean, you could do this one, but I don't think we're going to be going up that high, but you might as well. So you have one there, and you don't want to do too many. Like 3 or 4 is probably the max you want to do on the weekly chart. I'm just going to see if there's one more I can find. Here's another one. So you have this candle right here lining up with these 2 candles. So you see how the wick, these 2 wicks right here kind of line up with these 2 candles here. That can be another support level right there. And I think that, actually do one more. This is actually a lot, but usually I don't do this many. We have another one right here because of this candle, this candle, this candle. And then what you do is you go to the daily to confirm this. So now you're in the daily chart. So what you're doing is, now you could do the same thing on the daily if you find any that you didn't already do. Like here you have 2, looks like it lined up with that one, so you can do that one. And what you can do is basically just use these as support and resistance levels. Like right here you can see that it actually was kind of trading in that little trend right here. Up here it broke down for a little bit, but it was trading in this trend right here. That's one way of using candles. And this, like I said, you don't have to use this, but this is a pretty easy way because it's a very, I like it because it's when I started trading, it was a very visually pleasing way. You just look at candles and you make lines. It's not going to be 100% perfect. You want to learn all these other indicators to kind of like confirm this. But so I do is, or with this strategy, you start off with the weekly and then you go to the daily. You could even go to the 4 hour after that if you want to, to really see. This is the 1 hour. I don't even know if this one show. Yeah, this one we didn't have it for. So yeah, the 1 hour, and you can see if it does confirm. So like right here, this is where it broke that resistance line. So it was a support level here. It broke down once You go below the support. Now it's your resistance. It broke through the resistance. Kind of struggled to break that. Came back down. But anyway, that's one way of using candles. Let's go ahead and find another one. All right, so you start down here, and then you make a rule for yourself. Let me get rid of this line. So you basically say to yourself, using these candles, you're going to say, all right, so you found your, in theory, your entry, which would be right here, or your support, and that candle cheat sheet. I believe it's in the PBU Learning Center. The candle cheat sheet, I think, is in the PBU Learning Center. That's in the free class area. So what you do is you're making rules for yourself. So let's just say this is the 1 minute. Oh, this is the daily chart. So this is the daily chart. So let's just say that every single time that you see, you can do 2, you can do 3. Let's say 2. Let's do 3 red candles. Every time that you see 3 red candles in a row after an uptrend, you're gonna plot it. You're gonna plot it by making a trend line. So starting from here, the trade's going up. You have 2 red candles. So it doesn't count. Kept going up. 1, 2, 3 red candles. So what you do is, you can do 2 red candles. You can whatever works for you. This is more of a trial and error type of strategy. So right here you have your high. So you're gonna plot the high. Then you have your 3 red candles. So 1, 2, 3, and you're gonna plot the low after that last red candle. So you have 1, 2, 3 red candles. That's how you know it's like you're gonna start plotting. So you're gonna go to that last red candle. You're gonna plot it. Then I'll split this up a little bit. So there you go. So you have this right here. So now you're gonna go ahead and just do the same thing. So now it's green candle, that's 1 red, and you have 1, 2, 3, but it's still in the trading range. You're gonna wait until it breaks your support or your resistance level right here. You use open and close or high and low. For this method, just lows. I find a low, and I start plotting that. And this is kind of how I'm gonna backtrack and show you how we use this like live. But first, we're going to plot these points. So now it's coming up. So you're waiting until it breaks your resistance. So here you go. It broke. 1 red candle doesn't count. 1, 2 red candle still doesn't count. 1 red candle, no. So right here is your 3 red candles. So you have your high right here. Boom. Oops. Then your 1, 2, 3 red candle. Last red candle after 3 is right here. So that's another line right here. So now you're waiting for that resistance break, and boom, it broke the resistance. Using the support. Let's see. 3 red candles in a row. Looks like there's no 3 red. Oh, there's 3 red candles right there. So you can go ahead and draw. So you have, where is it? Where did I just see 3 red candles? Oh, right here. So you have your high, the green candle. You use your 1, 2, 3, and then you plot the low. This could be for day trading. This could be for swing trading. Really depends. I'm using the day chart, so this in theory would be for a swing trade. If you're using the 1 minute, you can use this for day trading. And like I said, this is just like one method. Like I personally use indicators as well. Like when I am charting and when I'm using support and resistance levels. But like I said, that is next class, and we'll be going over how to use indicators to do the same exact thing. This is kind of like a basic, easy way to use candles to do this. Because some people just don't know all the indicators, and maybe you want to start learning charting. This is a good like intro version. Just click my name in the chat, Scott, to get into the video. So same deal, we broke our resistance. I keep pressing that by accident. We broke our resistance, boom, only 1 red candle doesn't count. 1 red candle, 1, 2. And you can also use this during a day trade in theory. So, you're plotting, you plotted here, you plotted here. So like in theory, let me get rid of that. Okay, no, I did not want that. Okay, so in theory, if you're this is the daily chart, but let's say this is a 1 minute chart, you're day trading it, or even you're swing trading it, what you would do is, oops, did I just move that? I think I just moved that. Boy, where was that supposed to be? That's the only downside about using Webull desktop app is if you click something by accident. All right, what was this? This was this resistance of where? This candle. All right, hold on. I have to backtrack. All right, so 1, 2, 3 went down here, went up, went up, went up. 1, 2, 3. Okay, there it is. All right, so that's supposed to be down here. There we go. I think I moved this one as well by accident then. There we go. Okay. That's better, I think. Anyway, yeah, that's better. So as you can see, it's trading in this. As you can tell, I also never use the Webull desktop app. I actually use the Webull app to trade on the phone. So anyway, so as you can see here, you know, it was trading within this range for a minute, and right here is trading within the range. These are actually two on the stronger side. So if you want, you know, because you can see here is trading within this range for a decent amount of time. You can even like get, you know, your trend line. You can get a different color, so you can like color really strong support levels. So it's like, you know, red or whatever it may be. Basically, you're just doing the same thing. So it's coming up. You're waiting for, you know, in this, your rule, whatever your rule is. For my rule, it's 3 red candles, and then that's where you plot the next one. So you have the high, and then the low. And then the same thing up here, you're waiting, you know, green candles, 1 red, 2 red, and this is actually the high, so you're just going to plot the high as well, because that is a resistance. It's the high of the day, or high of the area over here. And then once again, you're just waiting for 3 red candles. If it does break down, and it did not up until 1, 2, 3, so you have here, and then down here is where the 1, 2, 3, 4, and that close right there. So unless I moved some of those bottom lines by accident, which I don't think that I did, I'm just going to double check these before we backtrack this. So we started down here, came up, and we had our 1, 2, those 2 red candles, our 1, 2, 3 red candles here. So this should be there. This is good because it's at that red. And then it came up, waited for it to break that resistance, and then we were looking for 3 more red candles, which is going to be right here. That doesn't count because it's right above that. 1, 2, 3, we'll put that. Yeah, that's fine. All right, so what you can do is you can back test it, you can see, or you can just use these, you know, I use these, you know, back here. So now you can go forward. I'm really hoping I'm not going to touch any of those lines. Here we go. And now you can use them as support and resistance levels. So, you know, down here you can see that, you know, it died, it came down, you know, it came up here, it broke down through the support, broke down through that support, kept breaking the supports until right around here, it looks like it broke the support, but, and this is for those of you in PBU, you know this, but stock doesn't actually break the support if the wick goes below it. It only breaks the support technically if the candle closes below it. So the candle closed here, so it actually did not break the support, even though the wick did. Picture this like, you know, like you know those electric fences for dogs. You know, the dog beep, 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 it came back, so it didn't get shocked by the electric fence, basically. So that's the way to think of support and resistance levels. If you know if the dog or, you know, the stock, you know, went above or below, but then it came back down, it didn't break it. You know, it didn't break the rule, or it didn't get zapped because of it. So as you can see here, it came down, and it looks like it's using this as support for a minute, came back up, it's using this as a resistance. So this might be your trading channel right here, and it looks like it currently is kind of using that. It broke above for a minute, but it wasn't, you know, not very confident. So now what you're doing is you're seeing, all right, using past support levels, you're now trying to find a future trade. So you're looking, you're seeing, all right, I really want a strong confirmation, a strong break over this resistance line right here, because it looks like the stock is trading, you know, between these resistance lines. And maybe you see this, you're like, I feel comfortable starting a position, you know, around here, because I'm pretty sure it's going to hold up and, you know, hold up around this support. I'm not going to go all in just in case it breaks down to this support level, which looks like it did for a minute. And that's why we don't go all in. That's why you do the 25, 25, 50 rule. But so yeah, so like you see right here is, you know, it's breaking down. Maybe, you know, maybe this is around where you start your swing position. You know, it got broken down, it bounced again, and maybe you want to start your swing position, you know, buying small here at this little support level, you know, while you're, that way you can watch it and buy 10%. You know, it comes up, you're like, oh, that's cool. You know, maybe if you bought more, you could have made a little bit of money there, and if not, it's okay. You know, you're still in. This is still a swing position. It hasn't broken the resistance yet, so you haven't missed the trade yet. So, you know, it comes back down again. Maybe you buy some more down here. You know, once it kind of showed this as a little support. You know, right now you're looking at this as support. Looks like it kind of broke through. Still using this as support now, because once the resistance gets broken through, now that's your support. So this line right here, down here, was your resistance. It broke the ceiling. Now the ceiling is the floor. So your resistance is your support. So now it broke through, and then maybe, you know, right around here it's coming up. You can see that, oh, you know, it's bouncing off of this resistance level, coming down, and then here is where it broke that strong resistance right here, because you know, it wasn't confirming any, you know, you weren't getting good confirmation of a break over here. But here, you know, it broke it, came back down, then you have 1, 2 green candles followed by a nice move up. So that might be where you make your last buy. So, during this whole thing, you made your 10% buy, let's just say here, and then another 10% buy here, and maybe another one here, and then, maybe you made, now you're in like 40 or 50% down here, and then it broke the resistance, and that's maybe where you're going to make your last buy. Everyone else is saying, ooh, buy 100%. You just made your last buy. It's like 50%, which brings your average to, like, let's just say, I don't know, like 31, 30, 51, because you bought down here as well. You bought 50% of your position down here and the other 50 up here. Now, you put those together, divide it by 2, you get that number, like, let's say it's, around $31. Like, even below $30 if you were really good about those buys. That way, you have a better average than people who are buying up here in the 30, 38, 37, 36. You made a buy up here at 37, but you have like a 32, 33, 34, 31 average. They have a 37, 38 average. The stock goes to 44. You're making profit from all the way down there. They're only making profit from here to here. So you might have already made 10% profit. They only made, they're only up 6%, 5, and they're chasing the stock. You're not. You got in early because you know how to trade. And as you can see, it broke the resistance, came down, now it's up. It broke this resistance, and this would have been a pretty good swing trade actually. So what we did basically is we went in the past, on the daily, and we found, a low, and then we used a strategy, the 2 candle or 3 candle strategy. In this case, on the daily, we used a 3 candle strategy. We plotted a bunch of points, and then we waited until a nice little drop, and then we used those points to to ride the weight back up. And even here, like, maybe it's going to start finding its resistance here. It's high, and it's going to come back down maybe, and hopefully it'll start trading within this channel, and that's maybe when you might want to make another swing trade. You sell up here, you made your money, and then hopefully if you're hoping that it's going to break and continue going, and then hopefully eventually break this, if you're confident in the company, that's where you start your next position. So that's a big deal with swing trading, is knowing when to get in, knowing when to get out. And one way of doing that, this is not necessarily easy, but it's a lot easier than using 5 different indicators. It's just simply plotting points based off of past prices. You're literally just looking at a low, and then you're waiting for it to you're waiting for 3 red candles, and you're putting a point. And you're waiting for another 3 red candles, you're putting another point, and then it works. As you can see, it worked over here. Like, we would have made money if we had used that. We saw this strong support over here, where this is a pretty strong support, and this is like the sub support, and we're using that, making our buys, and then boom, it broke the resistance. We're good to go. We make some bread. So that is one way or 2 ways of using candles to find support and resistance levels. Let's go ahead and do another raffle. So that's the end of the little bonus area or bonus class. I know that one went a little bit longer than I had expected, but we went over a bunch of great stuff with trading psychology, and a few little trading tips for candles, and this will be recorded if you missed any part of it. But let's do another drawing. This is number 3 of 4, so we still have one more drawing left after this. Looks like, is it gonna be? It's Toy Tacoma. Congratulations, Toy Tacoma. Oh, that's awesome. Toy Tacoma 17, you just won $25 cash. That's awesome. KO Tricks, they say sheesh. I feel like I should be paying for the live stream. So much knowledge. Yeah, premium, you pay for it, but we also do want to give as much knowledge, as possible, as much free advice, free trading tips as possible, to all of y'all, because everyone, like I said before, everyone should be able to learn how to trade. So once again, congratulations, Toy Tacoma, you just won $25 cash. And we have one more of these coming up. However, we're going to really, really quickly go through the homework. So I'm going to go ahead and get rid of these. All right, we're going to go over the homework real fast. We went over PBU class number 17, candles. As you can see, we went over, how a candle works. We went over different types of candles like doji, gravestone, hammer, long shadows. We went over, all that fun stuff. You had a video, you had some homework. Let's go over the homework. So, candlesticks originated from Japan back in 1400s, and if you go to the class, you know that that's not true. It's false. It actually originated from Japan back in the 1700s. And we will go over, why it was invented and all that, and what candles are and what indicators are and how they all work in the class. If you're looking at the 1-minute chart, each candle represents one trading day. R.I.P. to Dizzy Dene. Dizzy Dene was close there, but that being said, Dizzy was our PBU Student of the Month last month. So yeah, they got their time to shine then. But hope you never know. There's still one more raffle left, so Dizzy can still win. She can still win make some bread. So if you look in the 1 minute chart, each candle represents one trading day. It is not, and that's false. Each candle on the 1 minute chart, let me get out of this chart, is a trading minute. On the daily, each candle is a trading day. So that's why it's false. The wicks show us closing prices. That is actually false as well. So these wicks, as you can see in the homework, you have the body, which is for a green candle to open, and then the close, for the red candle to open and then the close. These wicks are the highs and the lows of that trading period. So in this minute, during this 1 minute, on the daily, during this one day, the stock went as high as $1.75, but it closed at $1.50. Sorry, Dizzy. An inverted hammer during an uptrend is called a shooting star. So this is an inverted hammer this is a hammer during a downtrend. If it's the opposite, basically if you just flip this picture upside down, it would be a shooting star. And the reason why is it looks like the hammer looks like a hammer. Shooting star kind of looks like a shooting star. It kind of looks like this gravestone doji. You see how like the shooting star, like this is the star, and then shooting down. That's how that works with an inverted hammer. A doji can show us possible reversal, indecision, or both. And a doji candle can show us both indecision or a possible reversal. So a doji candle, let me see if I can find one really quick. Here's a doji candle. In theory, it's showing like this is a perfect doji candle right here. So, the stock opened and it went up and then it went down, but then it closed right here. That's pretty indecisive if you've asked me. The bulls don't know if they're winning, the bears don't know if they're winning. It kind of ended up in like a draw almost, like the bears barely won. That can also show a reversal if it happens like right here. Because there was indecision, it's showing that, let's just say we're on a down, actually not right here, but let's say we're on a downtrend, right? And you get a doji candle, that can show a possible reversal up because the bears, they were in control, but the doji candle is showing that no one's in control anymore, which means the bulls this is their chance. Like, they see some weakness and they're like, oh, I'm going to pounce on that. Like they smell blood in the water when they see a doji candle like that, and they're like, all right, time for the bulls to be in charge now. Like the bears clearly are done with the momentum. They have a doji candle. They're not quite sure. They're not confident. Let's get some bulls in here, or vice versa. With bears and opposite. And then the hammer won't show a reversal until another green hammer is shown. That's not true. The close of the day. That's not true. It's confirmation. So with a hammer candle, as we see in the class, where's my hammer candles? Here we go. A hammer candle won't show a reversal until the confirmation. So confirmation, in this case, happens that the candle following the hammer closes above the closing price of the hammer candle. So this is the hammer candle. So you see that this one closed above the close. So this hammer candle closed right here. This one closed above the closing price of the hammer candle. So that's a confirmation. And that's how the hammers work. And which candle does not have a wick? And that is the Marabuzu. I totally mispronounced it. The Marabuzu candle. That's this guy right here. It's a big green or a big red candle. They're not very common, but here's one right here. There's really no wick going on. Here's another one. Boom. No wick. And, there's no wick. It's just a strong bullish or a bearish candle, depending on if it's green or red. So if you see one during an uptrend, a green one during an uptrend is likely to continue. If you see a green one during a downtrend, it might reverse, and the same goes for a red, but opposite. And that is homework number 17. We also had another question. Which candles made the most sense to you, and how would you use it? And the three people who got the answers for this, we had a lot of great answers. I picked three of the top ones. They got raffle tickets for this drawing that we do. The first one is Anthony Z. The doji candle makes the most sense to me. Now, this is what Anthony Z is saying. Anthony says, the doji candle makes the most sense to me because it's showing both bulls and the bears battling at the price, which then shows possible reversal on whatever trend, used with other indicators and a confirmation candle in some cases to identify and confirm it. So yeah, that was 100% correct about the doji candle. A lot of people said the doji candle makes the most sense to them. It's a nice way of putting it. Is like they said, the bulls and the bears are battling at the price. So it can show either confirmation. It can show either reversal or indecision. Let me just bring up the Discord. That way y'all can still hear me, right? So the doji candle, this is Dizzy Danae. is the next person who got raffle tickets for this. Dizzy says, the doji candle makes the most sense to me at this point. I will use this candle to identify indecision or a possible reversal. I've watched several videos and so forth on candlesticks, but wasn't ever able to grasp them. This video in class gives a great explanation of candles, so I feel like I can begin to use a doji to help identify a trend reversal or indecision, which is something I haven't been able to do in the past. So I'm super happy that the videos and the classes are helping Dizzy. I know I personally watched a lot of videos, before making these classes and on these topics, and I get you. A lot of them are really either too confusing or not confusing enough, if that makes sense. But so I'm glad that helped. The video helped and the class helped. Well, it's funny that Anthony Z was one of them. They won a raffle, and then Dizzy Danae was one, and Dizzy was real close. And our next person, rsteel70, says, the hammer made the most sense. I would use it by looking for the hammer indicator and then make sure there is a green candle to confirm it. This is easy for me to remember. And that's what we went over in PBU is, that candle, the hammer candle. So, you're waiting for that confirmation candle. Next up, we went over some candlestick patterns. As you can see, we went over the bullish 3-line and the bearish 3-line strike. We went over the abandoned baby pattern, the bullish harami cross, morning star, evening star, bullish engulfing, bearish engulfing, and I just said engulfing, and the bearish and bullish engulfing, and then the candlestick sandwich, as well as the 3 white shoulders. So a bunch of fun patterns that we went over for this class. And the homework, we have the first question. In a bullish 3-line strike pattern, some people believe that the trend will keep being bullish, and for bearish 3-line strike patterns, they think it will continue being bearish. This is because some people think that there is healthy pullback or a bull or bear trap. So as you can see with this picture, this is the bullish 3-line strike. So you have green candle, green candle, green candle, red candle. In this case, red candle, red candle, green candle. This is bearish and this is bullish. Why? Well, it's because people are thinking that in this case, for the bullish 3-line strike, it's going up. You have one big red candle that covers all 3 of them. Some people think that that's a sign of reversal, but some people use this as actually a sign that it's going to keep going up because this is just people selling off. This is healthy pullback, or in this case, this might be a bull trap. But that's why you have to use other indicators as well, because this could go either way. But it does signify that something might be happening, which is really important once you combine that with indicators to be able to know. So my poor inbox, yeah, it's actually pretty low at this point. I usually get a lot more than that during the trading day. We also have the harami cross. I'm sorry, the abandoned baby pattern signifies the beginning of a strong trend at the end of a reversal. That is false. The abandoned baby pattern signifies and we're actually going to go right into here. Abandoned baby pattern, yeah. So the abandoned baby pattern signifies the end of a strong trend and the beginning of a reversal. So the end of a strong trend and the beginning of a reversal. So that's actually false. So actually, more people did get that right than wrong. And then the harami cross, this pattern only consists of 2 candles in the bullish harami cross. The first candle is red and has a wick or body that brings the stock down to a low, and the next candle is a doji candle. The doji candle has to be the same size or smaller than the previous candle's body. And we went over this in PBU, so I'm not going to go over this in too much detail because I want to keep going on. But the bearish version is the opposite. This method typically works best on a daily chart. And like I said, if you're in PBU, you can watch the class, check out the handout so you can know how that all works. We go over that in detail. That's a fun one, though. This one consists of 3 candles and typically shows a bullish reversal. The first candle is red. So you have a red candle during a clear downtrend. The next candle opens lower, but has a small body and a wick, like a small doji candle. And the third candle is the reversal candle and should close at or above the middle or the first candle. I know it might be a little confusing, but once you break it down, which we do in PBU, it makes sense, and that's a morning star. Right here we have the morning star and the evening star. So as you can see, downtrend, one little green guy, or up here, one little red guy. We go over that in detail in PBU. And then, of course, the bearish engulfing signals the end of a bullish trend, and the bullish engulfing signals the end of a bearish trend. And that is true. So that is the end of our homework. Everyone who did get 100%, you will be getting raffle tickets. Actually, you already did. You're actually already on the wheel. But really quick, we're going to do some trading trivia for extra raffle tickets. This is going to be for our last drawing as well. So our first question, and the first 3 people to get this correct will get raffle tickets. So here's the first question. True or false? The doji candle can show I'm sorry, not true or false. The doji candle can show indecision or fill in the blank. So the doji candle can show indecision or bread maker, Dizzy Dene, C Rob 23. Reversal, correct. It can show indecision or reversal. I knew you meant reversal. I'm sorry. Name one indicator that can show you if a stock is overbought or oversold. We have not gone over this in PBU. So those of you who don't know this, you're going to learn this next class, actually. So T Frost is right. T Frost, RSI. Let's see. We took it 2 more. That isn't RSI. That can show oversold or overbought. So far we have T Frost. VWAP's more so for resistance and support, but it could show oversold and overbought in theory, so I'm going to give that to you. MACD, yeah, if it whoops. Kept Smilling. There we go. That's actually what I was looking for, is Bollinger Bands, so I'm going to give both of you that. Free Mind and Bread Maker. And the Bollinger Bands we're going to go over in real big detail. I love the Bollinger Bands. We'll be going over that in real big detail in PBU. But yeah, those are a couple different indicators that you can use. Like they were saying, we have the MACD. I'm not going to go over this in detail, obviously, but we have the MACD. I just want to show you what they look like for those of you who don't know. This is what the MACD looks like. You have the VWAP, which only works in the 1-minute chart. So I'm going to get the 1-minute chart up, and that's the VWAP. And then someone else said the RSI, which is actually the most common one. So RSI is simple. If it's below 30 or nearing 30, it's considered oversold. And if it's over 70 or nearing 70, it's considered overbought. Over here in theory, oversold would be below the baseline. So you have this 0 line, which is where the green and the red's kind of the histogram, which is the red and the green bars. That's where they connect, or I guess diverge, or whatever. That's the 0 line. You can just tell by going to right here. It says 0. Below, in theory, is oversold, and above, in theory, is on the overbought side. As you can see here, it's oversold on the RSI, and the MACD confirms that, and then it crosses over towards that overbought-ish area, which the RSI confirms as well. VWAP I don't necessarily use too much for oversold or overbought, but in theory, the VWAP shows you if you're getting the stock at a good deal, quote unquote, or if it's overvalued. So this shows you overvalued versus undervalued, which is really similar. Next question. Oh yeah, and Bollinger Bands are my favorite. I love Bollinger Bands. Where are you? BOLL. There you go. These guys are fun. Basically, what's this, the 1 minute? When it is down near so you have your 20-day moving average, which is the middle line. And then you have your top line and your bottom line. These are each 2 standard deviations away from the 20-day moving average. And in theory, if it's near the bottom, it's on the oversold side. If it's near the top, it's near the overbought side. You can see confirmed on the RSI. It's nearing overbought when it goes over. Now it's going towards the bottom, and it's nearing oversold. Same deal on the MACD. It's up here above the 0 lines, overbought, and below is oversold. So you can see how all these indicators kind of work together and can kind of do the same thing. So what you use really is up to you. That's why I go over. I think PBU, like the next 3 courses, or sorry, the next 4 courses that we got going on this month in PBU. I think we're gonna go over 25 to 30 different indicators, and you don't have to use all of them, but I go over all of them. That way you can kind of choose which ones you want to use. Like maybe you only want to use. I use the Bollinger Bands, the MACD, and the ATR, and I'll use a CCI. Some people use RSI instead of CCI. Some people use the IC, and some people use like the DMI. So some people use a TSI instead of the MACD. And if you don't know if that makes sense, you will once we go into PBU trading, or once we go over the next couple courses in PBU. Next question. We just did that one. Next question is, which type of trader was I, me personally, not you, but me, like What the Duck. What kind of trader was What the Duck? And this is more of a who was here during the beginning of the stream. You guys know exactly what I'm trying to say. Okay. Yeah, so Berlin, Neo, 6280. And T Frost again. Nice T Frost. You know what? Megatron and Fremont just like 2 seconds away. YOLO trader. You know what? Why not? Bread maker. I was. Hey, Jeffrey. You know. All right. So, yeah, they were on it, right? Yeah. So socially. What was it called? Socially responsible trader is what I was. A professional AMC trader. I was a lucky AMC trader. That's what I was. But yeah, and because of AMC, you know, because I'm a socially responsible trader, I traded AMC based off of that, you know, that exact mindset of, you know, screw Wall Street, F the man, fight the little guy, and you know, I use my social, issues and you know my way of, you know, how the person that I am, I let that affect how I trade my stocks, which you really shouldn't be doing, which I really shouldn't be doing. That's funny. Okay. Make it ready to go. All right. So no, anyway, next question. Why? And this is the top three. Top three answers. We'll get this right. I'll put a 2-minute timer on. Why do we use the 25, 25, 50 buy-in method? Hey, what's up, Ultra Mega Dude? So 25, 25, 50 buy-in method is the way that we buy in. For those of you who are in the free Discord, not part of PBU, you can definitely check out our free trading classes. Actually, you can see my screen, so it's going to be right here. Free trading classes. Click that, and you'll be able to see the PBU Learning Center, which goes over our 25, 25, 50 batting average, 25, 25, 50 buy-in method. And what that is we're buying in small. You know, you buy in, you decide how much you want to allocate to each play. Let's just say it's $100 per play. Then you decide how, you know, what your percentages are going to be. Whether it's 25%, 25%, 50%, it could be 10, 10, 10, 10, 10, 10, it could be 10, 15, 20, 25, 30. Obviously, as long as it adds up to 100%, that's all that matters. And then you buy in that way. So if it's 10, 15, 20, 25, 30, your first buy is with 10%. You watch to see what happens. Then it's 15%, and then 20%, and then 25%. Meaning, so $10, $15, and then $20 buy, and then $25 buy. And this way, you're not going all in and risking a lot of capital and risking stopping out really early. So, top three answers to get the best average, to get a better average. Let's get good averages. Distribute your risk, because it says because Wall Street Bet says not to. To average and reduce risk. To gain the best possible average and reduce risk. I like those ones. I'm at Berlin for now. Anthony, just because you said to gain the best possible. To get a better average. Yeah, risk is a big part of it as well. It's like a 2. It's definitely both of them. Test the waters is actually not is definitely correct as well. Like sometimes I just do a 10% buy-in just to see, just to watch it. Yeah, Jeffrey, 100% correct. So you don't buy too much to reduce the risk of price dropping lower. Like I'd rather make some more buys when the price drops lower than risk averaging out. Because chicks dig it. The dude. I know that you are the actual dude. To average down, keep yourself safe. Yeah, that's a good one too. Keep yourself safe. Upside down. And give yourself guidelines and rules to keep you on a plan. Because you're attempting to protect capital while simultaneously maximizing gain. If you buy in 100%, you put more capital at risk at a possible higher average or slower. Buying in method allows you to take advantage of dips that will improve your average and build a stronger position. And this is why it's so important to track your trades and kind of like I track what type of trade it is, you know, whether it's a beaten down play or it's a this or that. I track who alerted it, and then I track how I played it, and that way I can see, oh, it looks like the past 10 beaten down plays that I got into, I bought in too fast, or maybe the past 10 momentum trades I got into, I bought in too slow, and I ran before I was in, so I can adjust my plan accordingly. So yeah, perfect. And yeah, you Pookies is 100% correct. Pookies is actually isn't allowed to get in the trivia because Pookies is a yellow name, so moderators can't win money. Sorry, I can't win money either here, so I'm not allowed to win the raffle either. So, and just so you know, we do some fun mini games as well. I'm gonna copy this before it dies, before I lose it. We do some fun mini games. If you guys are in premium, you can go to the raffle mini game area. We did one which was what's your best dad joke? And the top 3 people won. Rich Deeds said, what do you call a witch who lives in the desert? A sand witch. Fat Matt 86 says, do they allow loud laughing in Hawaii or just aloha? Aloha? Really, that was really good. Dizzy says, what's the difference between a well-dressed man on a bicycle and a poorly dressed man on a unicycle? Attire. See, I love these kind of jokes. We also did define what FOMO means to you in 25 words or less, and the funniest answer and the best answer won. And the funniest answer was 25 words. I can do it in 3 letters, GME. And then Breadmaker said FOMO is a fear of missing out. So if you see everyone else making huge profits and you decide to chase what they have without due diligence or making sure it fits your plan, it often leads to bad losses as you get in later than preferred. As traders, it is important to restrain our FOMO and recognize it in order to make smart decisions and manage our risk to protect our money. And then our next challenge that we did was guess what price these tickers are going to close the next trading day at market close, and everyone made some guesses. I did not get one of them right. But we had all the people who got closest without going over, one ticket. So we have all fun ways of getting into the raffle. Yeah, Dizzy Danae had that really funny. I love dad jokes. Next question, and I think this is the last trivia question, as we're nearing that 2-hour mark. So if you are using the 1-minute chart, then each candle represents 1 trading day. True or false? Top 3 questions, or first 3. False. Wait, if you were using 1-minute chart, then yeah. So we have, oh gosh, hard to keep up. We have, who was first? We have Megatron. We have C-Rob, 23, and we have Anthony Z. I can't spell. All right. Yeah, there's the Anthony Z. Yeah. So, it's false. That is also false. No, okay. But yeah, it's false. If you're using the 1-minute chart, then each candle represents 1 trading minute. So this is the 1-minute chart. This is 1 minute of trading. This is another minute of trading. If you're on the 1-week chart, this is 1 week of trading. Each candle here is 30 minutes of trading. It really depends on what you are looking at as far as your chart goes. So let's go ahead and do the last raffle with all the extra people in there. Boom. Okay. This is our final raffle. Remember, if you do win, make sure to message myself what the duck so we can get you your prize. I'm going to shuffle it up. I don't know why I'm doing that. It doesn't really make a difference. But all right, let's go ahead and I just want to make sure everyone can, on my phone on Discord, everyone can see the raffle. Big bucks, says Shashi. Formerly known as Shushi. All right, let's go ahead and do it. Got a bunch of people on the raffle. I think some of y'all are actually in the chat right now. We got Dizzy in there. I know a lot of y'all are in the raffle that you can't see as well. But you guys are definitely in there as well. Breadmaker has a bunch of them from... I remember copying and pasting your name a whole bunch. Because you won the trivia thing. No, the FOMO thing. All right, let's see. C-Rob's 23 thinks it's going to be a green color. Boom. Let's see. $25 cash. This is the last of 4 raffles that we did today. We do these every Thursday, 9 p.m. Eastern time zone. It looks like we do have a winner. Paul's Anders, 66. Congratulations. You have just won $25 cash. All right. Well, I hope that you join us next time and join myself, What the Duck, for our next PBU live stream. But until then, I hope that you all make some bread.